For any country to grow, you need to have credit.
So I don't take it as an AI revolution, I take it as a revolution of knowledge.
Today we are not in a situation where AI can penalize or prosecute somebody.
A lot of us talk about China getting into the developed state, but the most critical part for India to be called a Viksit Bharat is when your rural infrastructure becomes Viksit.
Fintech usually, I'll set up a context in 2-3 minutes and then I'll address to my fellow panelists. It's more about people, it's more about relationships and probably less about technology. How, a woman customer in a rural India conducted her first transaction at a Kirana store through a business correspondent point is something that matters and kind of, channelizes the power of fintech. How a student was able to receive her scholarship at a school or nearby school through a common service center or a BC center. How a first time entrepreneur in, say for example, in rural district in a Punjab was able to get first loan for small business. So these are human interactions and definitely technology kind of channelizes it. And cutting the long story short, I think we have all relevant voices on the dais today, right from the cooperative sector, Mr. Prabhat. Then we have someone like very senior career banker and an MSME lender, Ashish. We have global regulator IFSCA. We have a technology player OPL. Then we have a national association and a self-regulatory organization for NBFCs. I think we have pretty much, and we are also expecting a couple of other, panelists to join us. So we have what essentially I mean that we have pretty much everyone who represents this value chain on this dais, and I have drafted a few questions for everyone, for all of them. To begin with, I'll turn to you, Prabhatji. Urban cooperative banks sit at a fascinating interaction. So interaction where, cooperatives are based on the community trust. And that forms a significant part of financial inclusion strategy of Government of India. However, historically what we have observed that there are constraints as far as technology is concerned. So we would be interested to learn from you, means what specific fintech intervention your organization is enabling that can unlock digital banking particularly for urban poor.
So thanks for this opportunity. Our organization basically is the umbrella organization for all the 1450 plus urban cooperative banks in India, and we would be a self-regulatory organization for the sector. Our mandate basically is to digitally transform. RBI has given us the mandate which is basically divided into 4 parts. One, we will be bankers bank for urban banks, like NABARD is for rural banks, we will be for the urban banks. Second is we have to create a centralized technology platform for all the urban cooperative banks because digital transformation of individual banks would be very difficult if we go bank by bank. That's the idea. And third part is the whole lot of capacity building advisory services that they need. And fourth is the SRO function. For the tech function, we are building the entire hardware, all the applications, cyber security, and all the manpower maintenance required to run the platform. There we are engaging with fintechs. We have already launched a platform called Bharat Kupathon with IIM Ahmedabad Ventures, where I think we had 2 meetings, one in Bengaluru, one in Mumbai. Total 150 plus fintechs have already registered. The evaluation is in process, and I think 40 plus have already qualified for engagement. Idea is basically we don't want to follow the same path that commercial banks followed, because most of the technology that even commercial banks are using is antiquated. Most of the code of the core banking systems are written in COBOL, languages that are not being used anymore. People are using now AI to decipher how to modify those codes written in COBOL. So if there is an opportunity to leapfrog for the urban cooperative banks, because these are mostly manual, there are 2-3 clear advantages of associating with fintechs for us. One is we can build now on latest technology which is available today rather than relying on technologies which were available earlier, already outdated, but the commercial banking is running on it. Second is in the commercial technology vendor space, the large vendors are not very flexible on the changes in product or innovation on pricing. So we are also finding that with fintechs, it's easier to get modified products at a suitable pricing, pay-as-you-go kind of pricing. That is the flexibility that fintechs bring, and that's the second reason why we are engaging with them. Third reason, which is for fintechs, their problems are basically what is the use case, what is the actual problem the bank is facing, which I should be solving for, getting that knowledge. Second, if I have an idea and bank also needs that, how do I pilot with 1 or 2 organizations to create a proof of concept? So we are also providing this window to all the fintechs. We are giving them a bank or 2 each to showcase what the product can do. And once it is established, the third challenge they face is scaling up, because distribution, sales, marketing is in itself a huge effort. A lot of fintechs we speak to find it very difficult to do these meetings with 1,500 banks, their board members, multiple rounds of meeting, travel, logistics, all that cost. They don't have the financial muscle basically to absorb all that cost. With us, they showcase at one place, and if it is proven and 2 banks endorse it, we then propagate this to the entire sector. So they are saved with a lot of distribution cost that is required. So there are clear advantages of associating with fintechs. For them, if they associate with commercial banks, they already have some legacy tech with which they need to integrate, they need to talk to, there are challenges. With UCBs, urban cooperative banks, this is largely a clean slate because the large ones have some tech, the mid to small ones are almost doing manual kind of services. So there's a clean slate available for these fintechs. Only flexibility that we are seeking from the fintechs is that these organizations are community-based banks, and it is proven globally, even in USA, in Europe, in Australia, these kind of community banks, cooperative banks are thriving even today. And even when Lehman failed, when Silicon Valley Bank failed, these urban cooperative banks or the cooperative credit unions there have survived all these challenges. So this will survive in India. How do we modernize? How do we infuse technology? That is our mandate.
No, thank you. I think that was a comprehensive one. And Sanjiv, welcome on board. And while we allow you to take some breathing time, before moving to Ashish, let me also reiterate that we have a limited time, and we have about 6 panelists. This, as I mentioned earlier, this is a comprehensive, panel which and touches upon ecosystem, all ecosystem voices. So maybe in what I propose is maybe per speaker around 5 to 6 minutes in 2 rounds, and then maybe a 5 to 7 minutes for audiences for any Q&A. So now for the next question, and thanks for this comprehensive view of cooperatives. I'll come to you in next round. So Ashish, you are someone who is a career banker who leads India's one of the largest NBFCs, which you guys finance, MSMEs, microfinance, fintechs, digital lending. You are also into debt syndication and other, ecosystem pieces. So I have a question for you that kind of touches upon risks, user experience, and operational costs. So since you work with a lot of digital lenders, so what role does digital lending platforms play in reducing operational costs and improving customer experiences as compared to a traditional NBFC model? And to the corollary to that, I'll ask a part B kind of a thing. Since you also may be working with the young companies, emerging companies, so since they are young, emerging, small size, probably they also carry some kind of a risks. So what are the safeguards to mitigate those risks?
Hey, thanks, Jatinder. Good morning. Happy to be here. I think you put together a fairly good questions for all of us to speak and to share what's happening in the marketplace. But interestingly, look at it, why do people like us exist? The Northern Arc exists is essentially connecting the middle. You have the massive innovation coming on account of Fintech revolution, which is essentially driven through the JAM, which is Jan Dhan, Aadhaar, mobile in India, which help us to leapfrog, build on a railroads of account aggregators and UPI. Now, what is essentially helping us to do is to enable the flow of money far more seamlessly than ever before, or than a decade before. They do about 186 million transactions, which is the second largest number of payment transaction anywhere else in the world. We moved about $3 trillion. So that's a sizable number of stuff happening, whether you are doing in Bombay, whether you are in a small village, you can go and make that payment using the UPI. Now what's enabling this? For any country to grow, you need to have credit built into it. If you need to grow by 7% or 7.5%, 8%, you need to have credit. The credit can come from the large public sector banks, can come from large private sector banks, can come from societies, cooperatives, all of these institutions, can come from non-bank finance companies. The people like us connect both of them. We bank about 400 plus fintechs. I don't think there would be a fintech in lending space where Northern Arc won't be the first, the only or the largest lender. We understand the risk on the retail credit, whether it's a personal loan, whether it's a business loan, whether it's a micro MFI loan, whether it's for buying a solar, whether it's for EV, whether it's for any of the stuff. Anything which has a large retail component to it, we can underwrite it, we use technology and data, and we can then take it, either invest in it from our own balance sheet, invest in it from our performing credit funds, which we've been running for 10 years, take it to larger global institutions in domestic markets or multilaterals around the world for them to participate in that credit in India. Or if not, make it available for you to invest in that credit through a bonds platform. That's exactly the role we play in enabling the flow of money, and we believe that anywhere between 2 to 4% of non-bank finance credit goes through our pipes in that way. Now, for you to bank these companies, you need to understand three things. You need to understand the real risk which they're going to originate and underwrite, whether it's a BNPL, whether it's any of the loan being given, you must be able to understand what's the risk. The second part of the risk is how that institution is going to underwrite that risk and manage that risk, where comes the governance. And one of the biggest factor is the success of a company is about how the company is bringing that policy into play. And the third most important thing is how do they source of funding. Most of the companies fail not because they got the first two wrongs, is because they could not manage their asset liability. I think a combination of that really helps us to enable the flow. We move about 35 to 45,000 crores in a year, just getting companies to get access to that credit and make it available to the smaller institutions. Now, the real part of that is how do you make it work is essentially how do you monitor the risk. And our thesis is pretty simple. We should know what's happening in the moment of truth, and I call it a moment of truth. The moment of truth is when somebody in a village goes to initiate that credit, to underwrite that credit, to service that credit, to collect the repayment for that loan, and how that loan gets closed. Our portfolio is spread at about 690, 700 districts in India. That's about 90% of India's geography. And that means we must know what's happening at a pin code level, and we should be able to underwrite that risk on a pin code level. And the combination of a data science capability, combination of 100 years of climate data, all the data set, coupled with the touch and feel of what's happening on the ground, enables us to make flow of this money available. And I think that's the core differentiation in the fintech. Now, why the fintechs should be there? Correct. So you got a government of India put together through all the pieces, probably the best tech or the payments platform anywhere in the world. If you rank order it around all the metrics, you will see India's payment ecosystem and top 2 payment ecosystems or top 3 payment ecosystems across all the 160 countries in the world. uh, it's enable the institution to make that money available instantly than a conventional bank would have originated and underwritten that loan. It's the speed with which the loan's being underwritten, at the cost it's being underwritten, and using the alternate data to underwrite, which is what's making all the difference. So the speed, the cost arbitrage of the reach, coupled with the use of alternate data, which allows them to underwrite these loans, which the conventional banks have missed. And I think that's the big part of it. The interesting part of it, while we feel that the conventional banks are not missing, we are able to take large part of these loans and take it to the world's best financial institutions for them to participate. So we do large amount of securitization of these loans, make it available, bundle it, and make that as a good investment paper for large bank to participate. So they may not be directly originating this loan, but they are investing, they're providing the liability for financial institution or for fintechs to lend money to it. So that's the bigger shot of what we wanted to say.
Thanks, Ashish. You kind of nailed it because you see both sides, and a comprehensive view is really, really useful. And as you rightly mentioned, that capital is really important if we want to move towards a Viksit Bharat, which also means that today we are at something around 3.9 trillion USD as a GDP, reaching to 35 trillion is the aim by 2047, and increasing per capita income also by 15 to 18,000 USD is what it means to be a developed nation, at least as per current metrics. So interestingly, connecting to the capital market, let me come to Sanjiv Bajaj from Capital Finance. So Sanjiv, I think I have a question for you on principle of product suitability. So Bajaj Capital is historically, you guys have served middle class and above, and now of course getting into tier 3 and onwards. As fintech democratizes wealth management in India now, and more participation coming into capital markets, are you finding that products really being delivered to first-time investors in, say, tier 3 towns are genuinely appropriate, or is there any risk of accessibility without suitability? So again, RBI also talks about this principle of product suitability. So although there is an excess available, but what about product suitability? So do you see it as a risk as we move down in tier 3, tier 4, and there's a paucity of financial literacy and so on and so forth?
Yeah, I think thank you for asking a very interesting question. Today we are living in a world which is getting revolutionized, and it is getting revolutionized very fast. And people talk about AI revolution. Is AI revolution actual AI revolution, or is it something else? Let me ask people here. What is AI revolution about? Have you seen the ChatGPT ad? Okay, what is it doing? It is giving knowledge to a common man. So I don't take it as an AI revolution, I take it as a revolution of knowledge. Today, people are writing to me emails from tier 3, tier 4, which are so well drafted that, probably the best person in this room couldn't write those emails. Earlier, only a very few people had the knowledge to write that email, and most of the other emails that used to come, you couldn't even understand what the person was complaining about, what the person is trying to say. But now if you look at it, it is so structured, and now with Claude, which is also reaching the masses, it's so well defined. This is my problem, this is the solution I want, this is, so there is a knowledge revolution happening, and what is happening is that you can talk to it in any language. So what people are also doing is they are asking about the product. Is this a right product for me? What do you feel about this product? I've been offered this product. Luckily, I come in from an industry where whatever we offer is actually good for the customer. Our worst product will give you 5% return. Okay, 4.5% return. Because of the regulations, we can't create products below that. Okay, so at the end of the day, you will still get your money back, you will still get coverage, you will still get protection for your family, and you will probably get a bank interest rate. that's the worst product that we'll have on our portfolio, and a better product will give you better returns. So we are slightly lucky, but there is a knowledge revolution happening. People are now scanning those, the salary, borrow against the salary, where 40-70% interest rates were being charged. And they are writing to the RBI, how dare you allow these products? And this is a common man. You know, my own servant was showing me, he did borrow against the salary, and he realized that he's paid 72% interest. And he's written to RBI. I say, yeah, please don't quote me that I work for Sanjiv Bajaj. I say, please don't quote me in these mails. You know, but, and you know, and that the AI told him that build your credibility by quoting your boss and other stuff. So there's a huge AI revolution happening. There's a huge knowledge revolution happening. And what we, Bajaj Capital, has always excelled on is trying to understand people's voice. We have always tried to understand what is the product, what is the need, what is the pain, and if we can solve that pain. So whether it started with building companies fixed deposit, or being India's first mutual fund distributor, or starting a concept of SIP. So, but it is a very exciting time where people are able to articulate what they want. People are able to articulate what they like, what they don't like. People are able to judge between what is good, what is bad. So I think this is going to be a revolution where if you are able to deliver as fintechs what people need, and you are able to explain to them, and you are able to justify it to them that, look, you can validate it through AI, that this is a great product for you. There's a huge opportunity out there. So I'm not looking at it as a challenge. I'm looking at it as an opportunity to deal with much more intelligent, much more informed, much more better audience. And today we are using it. We have started using it in a small way, and our closing percentages have gone up by 5-10%. So we are able to use AI, person's own AI, to explain to him what we are trying to tell him, which earlier he was not trying. And he can now listen to it in the language of his choice. But yes, the products which are not good, today they are getting ripped by AI. And I was telling my team, today you can't play smart. You know, today you're dealing with people who are smarter, and you have to deliver them what they need.
No, thanks, Sanjeev. I think that's an interesting take. Using an AI filter, however, that's really interesting, and most of most of us are using that, and that's what we were also discussing backstage, at least initial conversation. But just one alternate view that also exists is that using AI. What if a AI based model kind of hallucinates, maybe a 15 to 20% hallucination, or black box algorithms, and that's what RBI is also kind of, when we engage with the different stakeholders, including regulator, I think these questions also prop up. Interesting take, and since this is a tech continuity, Ashish mentioned about it, you mentioned about heavily about AI lens. Let me move to the tech guy in a room, Jinand, who leads OPL, Jinand Shah. So because honestly speaking, even I Googled about OPL, and I was pleasantly surprised to learn that the kind of work they have done in terms of building banking infrastructure like Jan Samarth, PSB on online 5 minutes loan, Jan Suraksha, and similar kind of stacks. So Jinan, my pointed question to you is, as a Chief Innovation Officer, you sit on top of stack of public digital infrastructure, Aadhaar, UPI, account aggregators, ONDC data. So how do you decide what to build versus what to wait for? And since we have around 40, maybe 12 to 14,000 fintechs, that's an official number in this country. So do you see that fintechs are really innovating tech, or is it just old wine in a new bottle? I mean, is that circulation happening actually, and there's a lot of talk, or are they really kind of innovating? And how do you decide what to build versus what to wait for?
So it's a good question. I mean, so many fintechs in the market. How do you decide which is the right fintech? Okay, so broadly, because today we met and he was not knowing much about OPL also. So we work for the banking industry. It's a fintech that is primarily owned by the top institutions of the country. So we discussed the SBI or HDFC or HSBC CRISIL, CIBIL, NABARD, SIDBI, you name any top institution of the company, of the country, that would be a shareholder of OPL. However, we never come on the front because it is always these institutions for whom we build the infrastructure, they are always on the front, and we choose practically to be on the back and deliver the projects. So this is one of those fintechs in India which is primarily owned by top institutions of the country. And because of that, a lot of DNA of the top institutions and developmental DNA of creating public infrastructure has been built in our fintech DNA also. So our DNA is more like a hybrid DNA of a fintech and a developmental institution, how you create and launch a public digital infrastructure. On the credit side is something we have been, doing a lot of stuff. I'll broadly classify the answers into 2-3 segments. One is, how much is the scope for fintech in the industry? Okay, so traditionally, since 1947 of independence, as on date, the numbers say that more than 1,20,000 crore is what the MSMEs want. Of this, you remove the equity part, which is say around 30-35,000 of that, of 1,20,000. So what is remaining is around 85,000 to 90,000 crores. Of this, say 40,000 crores is already addressed. So till date, we have addressed say around 45% of the unmet demand that is there. So there is still around say another 45,000 crores which is left. Of this 45,000 crores, I will leave around 15,000 crores on side because that is where the MFIs are currently targeting, and that is the core sector where the fintechs working on MFI have to target. And the 30,000 crore are balance which the banks have not been able to deliver till date. And that is where the fintechs come into play. The banks, like a co-panelist told, that bank doesn't know the DNA of the last mile because they have a reach to certain extent. Who has the last mile DNA coverage is NBFCs, cooperatives and rural banks. So these three will play the key role, and the fintechs that are innovating today in this last mile delivery are the fintechs that will be the winners for solving this which has not been solved since so many years. And how we at OPL know it, because one of our shareholders is NABARD, and we are creating this kind of infrastructure for the RRBs, that is the rural banks and the cooperative banks. So we understand there's a big requirement at the rural banks and the cooperative banks, along with the MFIs and the NBFCs that are already there in the market. So this is one segment. Now how this is addressed? So second question, and to certain extent one of the co-panelists also answered is alternative data, and I would rather say it is more of formalization of data in the industry. So we have been fortunate enough to work in one project which is called as formalization of informal. Okay, so for example, we take an assumption, say India has MSMEs which are formal MSMEs. Any of one of you know how many MSMEs were registered in Udyam 5 years back? Anyone can answer also randomly. 5 years back, how many MSMEs were registered? It was around 3 crore MSMEs. And what was the number that was published? It was around 6.5 crore MSMEs are formally registered in India. That was on paper. We have worked on creating an Udyam Assist platform with one of the developmental institution called SIDBI. And today the registered MSMEs in India are 7.5 crores. From 3 crores, registered MSMEs who have an Udyam or Udyam Assist number are 7.5 crore. And the number which was earlier 6.5 crore of MSME has crossed around 9 crore estimated MSMEs of the country. So we have crossed around 7.5 crores registration also already. So if these MSMEs are registered with a government database, that means they have become formal, and that means you can lend on top of it. So that is where, getting the data formally of these MSMEs is critical for building digital rails on top of it. Now, how much innovation is happening? For example, it was asked that whether we are able to leverage the digital public infrastructure that is there or not, and whether innovation is happening on top of that or not. So I would rather classify it into 2 segments. One set of fintechs definitely are the fintechs who are trying to, have a different flavor, or you can say a different wrapper on top of it on the DPI that is there, and launch it. The second are actual innovators. So India has a list of lot of innovators. which are building on top of these rails and launching new innovative products. And that is where the urban cooperative banks also will be leveraging this kind of innovations that will be happening in the country. And the last point that will answer is Viksit Bharat. So 2047 Viksit Bharat. Viksit means we are developed country. We are like a US or European country which is a developed country. And we go to India and we see a city like Delhi getting developed. That is fine. A lot of us talk about China getting into the developed state. But the most critical part for India to be called a Viksit Bharat is when your rural infrastructure becomes Viksit. When you go to a village and village has a bank which is as good as a bank in a city, right? That is where the cooperatives and the rural banks have to be developed. So that is the biggest requirement today. In 20 years is not far, 20 years is very nearby. So the biggest requirement for becoming a Viksit Bharat is to get the rural economy of our country to reach that milestone. And that is where we are also working a lot, and most of the fintechs or tech fins have to work on that part to make India Viksit Bharat, which is the biggest priority of the government that is there today. So those are all the points, sir, which we can.
No, thanks. I think that's fairly a comprehensive view. We have seen, you know, the views from cooperative sector, the capital markets, MSME, technology, and before I come to, you know, international regulatory side, I'll take a view from NBFC Association and NBFC SRO. So I'll come to you, Raman, and then I'll come to you, Joshy. You know, when it comes to bank fintech partnerships, why we haven't yet seen, you know, because you work with NBFCs and as I understand, this is one of the, you know, very hot topics, bank fintech, bank NBFC partnerships, especially when it comes to co-lending. You know, we haven't yet seen that UPI moment of co-lending in India, although there are, you know, RBI has put up the regulatory framework, we have different constructs, CLM1, CLM2, you know, but that moment is still, you know, probably yet to arrive at. Why are most partnerships still, you know, bilateral and slow and solving this complex comfort? And we also, you know, hear that, you know, technology will solve it, there are technology hurdles, APIs and so on and so forth. So how do you see it all conundrum, and do you believe that, you know, there is a apt tech framework? Is it a tech problem, or is it a, you know, kind of a some other problem that, you know, between relationship between two different kind of entities coming together?
Thank you. So first of all, thanks for this opportunity. See, we need to understand very clearly the kind of lenders in the market. So as you said, you have banks. So when I say banks, I'm including all types of banks, small finance banks, rural banks, and even cooperative banks. And then you have financial institutions like SIDBI, NABARD, All India Development Financial Institutions. And then you have NBFCs. Now, the point is fintechs are broadly as lenders. So fintechs, of course, also we could categorize into three categories. Broadly is someone like we have Mr. Shah from OPL, who are doing a phenomenal job in developing tech and using tech tools which are being used by various lenders for their various activities, maybe underwriting or operations, etc. The other two are the ones who are lending. Now within the lending space, the ones who lend in their own books are technically and statutorily required to register as an NBFC. Now the moment they take an NBFC shape, they become an NBFC as well as fintech. The other would be what we call as LSPs, providing platforms, back-end tie-ups with banks and NBFCs. To answer your question, see, when it comes to the LSPs, already LSPs are working with a lot of NBFCs as well as banks. That's there. But going ahead, partnerships between bank and NBFC is a structured partnership model which RBI floated, what you mentioned about co-lending, CLM1 or 2, whatever. And already the partnerships between banks, NBFCs and fintechs is there when it comes to the LSP model. But if you ask me, a structured partnership, something similar to co-lending, and what you also asked me could be the hurdle there, it's more from the regulatory side. So even when you talk about, you know, credit lines on UPI, for example, this is something which currently we are aggressively following it up via RBI to even allow NBFCs to offer credit lines on UPI, something which is allowed to banks, right? So it's I think, and to give due credit to the regulator, we need to give them some space and time, because the things are evolving so fast that obviously they have their own concerns relating to the larger issues of keeping larger public interest, fair practices, etc. and etc. Because mind you, the LSPs are something which are outside the regulatory purview. So RBI wants to keep everything tight and regulated. Going ahead, partnership will be the flavor of the day, will be the order of the day between various entities in whatever shape or manner they are into lending. Partnership will be the way forward.
Oh, thanks, Raman. I think that's really interesting. And finally, since we still have some time, I'll come to Joshy very quickly. A last word. IFSCA, as we were discussing backstage, plays a critical role in enabling regulatory framework in GIFT City, and then many of Indian companies, fintechs, have benefited from them. So my pointed question to you would be, IFSCA is experimenting with sandbox environment and RegTech solutions, we understand. This was a view which kind of Sanjiv also brought, AI-driven transactions and using AI lens. So can technology itself, when I say technology, I also allude to AI-driven transaction monitoring, behavioral analytics, and so on and so forth. So can technology itself ever substitute the enforcement piece, the enforcement muscle that regulators bring, especially at a scale of India's transaction volumes, and when we are also talking about exporting some of these technologies like UPI globally? Thank you.
Sure. Good morning, and thank you for having me here. On a lighter note, they say the regulator will have the last word, so probably that's where he had his question there. Interesting point, from a sandbox to enforcement. You're talking about a range of things here. So, as a regulator, there are some cardinal things which are close to our heart, right? So, financial stability, market integrity, consumer protection, these are the things which we do. And probably that's the reason, you have some limitations. And the tools we have are probably, we do regulations, we do supervision, and then we do enforcement. So that's how the matrix is lined up. On the other hand, to foster innovation, we have sandboxes. So IFSCA recently published a Fintech sandbox framework. We have different types of sandboxes. Experiments happen there. Now, it's a very interesting question. With AI coming in and taking over the enforcement muscle, so we are straddling from one end to another end. So we need to understand a little bit, stepping back. So when regulations are made and licenses or approvals are given, the institution, the entities do the job. And then there are supervising teams in the regulator who do on-site and offshore or off-site supervisions. A lot of regulatory filings happen, they go through the data. So this is the space where a lot of AI can help. So while the RegTech might be for your regulated entities, we use something called as a SupTech, the supervisory technology on this side, to process all this information, get the AI to raise the red flags. So while AI can flag something or recommend something, today we are not in a situation where AI can penalize or prosecute somebody until we have something amended in our constitution or there is a legal standing for it. The enforcement happens because the regulator has the law or the acts and other aspects which are backing them, giving the power. So typically when you talk about regulation, either we give a nudge by giving an advisory, the supervision instead, but then still they're not listening. You go to enforcement, it becomes a caution, it becomes a warning, and then probably you're going to give a penalty, you're going to give a suspension, you revoke, cancel, or debar. So that's the grade which goes. So today we still need the human in the loop, as they say. And how I would like to conclude is probably very soon we might have AI agents coming there to help us in supervision. But the enforcement piece, I think the regulators will still keep close to our heart until there's a constitutional change. In Viksit Bharat, we have agents are like a body corporate or recognized like that. But till then, I think the regulators will hold the enforcement close to the heart.
Thanks so much. That's really interesting way of looking at it and understandably so. Thank you so much. I really thank all my panelists.
Thank you so much, dear panelists. Let's hear a big round of applause, and I request the panelists to please stay on the stage. Thank you for your valuable insights on building a more inclusive and resilient financial ecosystem. And may I request Mr. Jatinder Handoo to kindly felicitate our panelists with a memento. We are extremely honored to be joined by Dr. Sanjiv Bajaj, Joint Chairman and MD Bajaj Capital, Mr. Prabhat Chaturvedi, CEO, NUCFDC, Mr. Ashish Mehrotra, CEO and MD, Northern Arc Capital, Can we hear a big round of applause? Come on, dear audience. Mr. Joshy, Chief General Manager and Chief Technology Officer, Head Department of Technology, IFSCA. Mr. Jinan Shah, Chief Innovation Officer and MD, OPL. Mr. Raman Agarwal, CEO, FIDC. Thank you, and may I request Ms. Charanjeet Kaur, Senior Manager, Exhibition India Group, to please come on stage and felicitate our moderator, Mr. Jatinder Handoo, CEO, Unified Fintech Forum. Now let's hear a loud round of applause for all our panelists.